If you're trying to time every Bitcoin top and bottom, that game ends with anxiety and usually losses, severe losses. But here's the good news. There is a strategy that works for 95% of people who actually want to build long-term wealth in Bitcoin. It's called dollar cost averaging, DCAing. And no, this isn't just for your grandpa. This is a tried and true method that can work wonders if done strategically. I'm talking about strategically picking the most optimal points to get your money into Bitcoin. It's not a sexy topic, but it's definitely overlooked and misrepresented. Not all DCA is created equal. There's the full cycle DCA, how to ride the whole bull bear cycle like a seasoned investor. And then there's mid-cycle DCA, how to stay sharp in the chop and tilt odds in your favor. Let's start with my absolute favorite tool for beginners and seasoned investors alike. This thing is absolutely incredible. Everyone should be using it. We're going to talk about the CBBI. This is a aggregate composite score of 11 indicators, normalizes it to a 0 to 100 score. This is 100% open source. You can take a look at it. If you're going to just use one tool and nothing else, this is by far the best one there is. You can see all the inputs here. You got the pool multiple, the MVRV Z-Score, reserve risk ratio, pi cycle top. It aggregates them all into a score and gives you an amazing idea of where we're at in the cycle. Anytime we're below 10, that's basically accumulation season. And anything above 80 to 90, that's where the air gets thin, right? That's where you want to be selling. That's where Coinbase is the number one app in the App Store. That's when CNBC is running 24-hour live coverage about Bitcoin price. This doesn't predict exact tops or bottoms, but it helps you zoom out and DCA when the environment is cold. So for full cycle, this is number one, hands down. Definitely spend some time looking at this, and it is a must-have for any serious Bitcoin investor. All right, let's talk about the pi cycle top, which is part of CBBI, but I like to look at it as a separate metric by itself because it's very, very simple. It's two moving averages. It's the 100-day simple moving average and the 350-day simple moving average multiplied by 2. That's it. There's an oscillator here on the bottom. Historically, when the 111 crosses above the 350, you're within days of a market top. You can see it back in 2014, 2013, 2018, and also in 2021. This is your exit warning. While not technically a DCA buy tool, it's essential for pausing buys when FOMO is peaking. A good way to also look at this for the check on chain version, you can see it highlights the price in blue when it's very oversold. These are amazing entry points, so you can use it for full cycle DCA investing. We'll move on to the investor tool, which is another very simple favorite of mine. This is definitely geared towards folks just starting out that want to understand where we are in the cycle. This one is the 2-year simple moving average times the 2-year simple moving average multiplied by 5. It gives you these two beautiful lines, one red for when you're oversold and one green for when you're overbought. This will decay, meaning the alpha here will decay. You can see the last cycle, we never actually breached the SMA times 5. We just kind of touched it, but we have gone under it in every single bear market. Your buy zones would be here under the red line. Your sell zones would be here above the green line. Pretty simple, nothing too crazy. Let's go on to the next section. And I think this is the more important one because having a good understanding of full cycle investing is important. This is where some of the smarter tools come in. And we're going to talk about how to fine tune. This is one of my favorites. This is by Axel Adler Jr. Definitely give him a follow on X. He posts amazing analysis. But the core idea here is only buy Bitcoin when it's trading below the short-term holder cost basis. Specifically, buying when price is under the both 1 week and 1 month realized price. They might ask, why does this work? It signals short-term capitulation. Historically, these moments create asymmetric entries, even mid-cycle. Important caveat here, though, is you do not want to use this during a bear market. So you do not want to use this after the cycle has peaked and price needs to find a bottom. This is only specific for when you have re-entered accumulation and re-entered the early or middle stages of a bull market. Now let's talk about the last indicator. This is an incredible tool for mid-cycle timing. This is the short-term holders SOPR indicator, which just stands for spent output profit ratio. This measures whether short-term holders are selling at a profit or a loss. Below 1 basically means panic selling. Above 1 means profit taking. Mid-cycle, if the SOPR is under 1 and under realized price, DCAing makes sense. During a bear market, this is the important caveat with both of these indicators to point out. You can see in the last bear market, we stayed under realized price and bounced off of it continually until we actually found a bottom, flipped the indicator positive, and started this current bull cycle. So it's important to know these are not tools for DCAing when we are trying to find a bottom after a cycle has peaked. These indicators are specifically for when the market has bottomed and is now beginning its bull cycle phase. DCA isn't about being perfect. It's not. It's about showing up when others are scared, uninterested, sidelined, distracted, whatever words you want to use. For full cycle, you have to follow the macro. For mid-cycle, read the realized price, see the emotional signals, use that to your advantage. If you combine these tools with discipline, you don't need to be early. You just need to be consistent. And that is one of the key things that is easier said than done. And if that sounds boring to you, just remember the boring stuff is what actually builds wealth. Sitting on your hands while the bull market goes from 23K to where we are today, about 118, with all the volatility and drama in between, is extremely difficult. Zoom out, DCA with intent, and ignore the noise as best as you can. If you made it this far, thanks for sticking it out with me, and thanks for watching.